West Coast Paper Mills, an overflowing cup of cyclical profits. Quite interesting daily chart of West Coast Paper Mills. Up move for over 3 years starting 1st April 2020. Scaling a peak of 664 and then moving within a range. As for peers, it has been mirroring the trend of JK Papers, which has done better than West Coast. And in its patterns, there is triangular formation across the year at regular intervals. The latest being after 23rd February 2023 with a base firmly held at 460. Over last 12 months, the share price has remained in the positive territory, being above 200 EMA. But July, there is a breakdown and the share is in the bearish territory. As price action data suggests, quantity rising with every fall in price, bearish pressure has been mounted. With its current market price, West Coast is having a cushion of 3.5% to its 52-week low and is away from 52-week high by almost 40%. For any up move and a fresh triangle, crossing 509, the 23.6% Fibonacci, is essential. West Coast Paper Mills, 2023 exceptional revenue growth 45%, 5-year CAGR 23%, reflected in PAT, growing with a 5-year CAGR of 37%, a PAT percentage all-time high 22.1, fairly reflected in the EBITDA percentage of 33.4. Behind the exceptional performance of FY23 is booming market condition and company's capacity utilization closer to 100%, benefits of operating leverage reflected in EBITDA. A look at the per ton matrix. Cost per metric ton peaked during FY23, but the increase in margin per ton was quite high during the year, adding up to a realization per ton at its peak margin percentage at an all-time high in FY23. The reason behind the exceptional realization is the high international paper prices, which are used as a benchmark for local pricing, and also booming demand within the country during the period. For a cost increase of around 6,600, increase in price is almost 3 times, giving a neat margin incremental of rupees 16,100. But over 5 years, company's quantity of sale has grown by a meager 1%, suggesting the entire increase in realization is cyclical, exceptional, and might not be sustainable in the long run. A well-known paper mill, self-reliant in materials, power, steam and water, among the largest producers, has 2 business segments, paper and pulp and telecom. But the real contribution, almost 96% of revenue, comes from paper and pulp. And paper and pulp maintains the lead even in contributing profits, earning almost 99% of company's profits. Strong segment and is quite effective. West Coast has invested in its subsidiary, 72% shareholding. It contributes 40% of group profits. Q1 FY24 results of Andhra Paper Limited has been impressive. Revenue growth 6% and EBITDA year-on-year growing by 25%. Indication of what to expect in the consolidated results of West Coast Paper awaited in middle of August. West Coast Paper Mills has an exceptionally strong operating cash flow, peaking at an all-time high of over 1,300 crores during FY23, has been quite efficient in managing working capital and regular capital allocation program besides normal dividend. It sits on huge investable funds, and the industry being cyclical has got the challenge of maintaining appropriate return on its capital employed. Balance sheet of West Coast Paper Mills, a combination of non-current assets and current assets, adding up to a total balance sheet size of over 4,100 crores. In FY23, equity has been growing due to excellent operational performance, and as on date, equity forms almost 73% of the balance sheet size. Company has been successful in generating decent returns and promoters have been consistently holding 56.5%. Mutual fund and FPI have been equally supportive. West Coast Paper Mills has a market capitalization of 3,150 crores. Based on its recent profits, PE multiple is at a low of 2.9, which is below even the 5-year median of 3.2. The price earning of West Coast is even better than its industry peers. Company has a decent payout average and dividend yield, but the concern is in a cyclical industry where abnormal profits distort the level of price earning multiple, it is essential to use the PE multiple along with other tools to make a good buying decision. From an overall perspective, strong realization, exceptionally high profits, operational cash flow quite impressive, equity forming almost 3/4 of balance sheet, but quantity growth next to nothing, industry being cyclical, risky, price in the bearish zone, too close to 52-week low. Hope you find this presentation on West Coast Paper Mills to your advantage. I am Vittal Prabhu with a weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.